Ever wondered how billions of dollars can travel across the world in seconds? Yet when you send money, it sometimes feels like nothing actually moved. Today on Knowledge Hub, we're diving into the invisible infrastructure that powers global banking and why your money almost never physically goes anywhere. When you tap send on your banking app, your cash doesn't jump into a digital suitcase and fly across the planet. Instead, banks operate on a system of ledgers, messaging networks, and central bank settlements. At the heart of international transfers is SWIFT, the Society for Worldwide Interbank Financial Telecommunication. Contrary to popular belief, SWIFT does not move money. It sends highly secure financial messages between banks using standardized MT and ISO 20022 formats. Think of it as the encrypted email system for global finance. When Bank A wants to pay Bank B, it sends a SWIFT message instructing the receiving bank to credit a specific account. The actual money, it's adjusted in internal ledgers. But here's where it gets more technical. Large value payments are settled through systems called RTGS, real-time gross settlement. These are operated by central banks. In the United States, that's Federal Reserve via Fedwire. In Europe, it's the European Central Bank running Target 2. In the UK, the Bank of England manages CHAPS. RTGS systems settle transactions individually, in real time, with finality. This means once the transaction is processed, it cannot be reversed. No batching, no waiting. Just instant settlement between banks' reserve accounts held at the central bank. And here's the key. Banks don't move piles of money around. They hold reserve balances at the central bank. When a payment happens, the central bank simply debits one bank's reserve account and credits another's. It's ledger math at a national scale. Now let's go global. When money crosses borders, correspondent banking comes into play. Banks maintain nostro and vostro accounts with each other, essentially accounts held in foreign currencies. If your bank in Sri Lanka wants to send dollars to someone in New York, it likely uses a correspondent bank that holds USD reserves. Instead of shipping cash across oceans, the correspondent bank adjusts balances on its books. The global banking system works like a massive network of interconnected spreadsheets, constantly reconciling balances. So how do billions move in seconds? Because nothing physical moves. It's synchronized database updates across highly secure, redundant data centers, using cryptographic authentication, multi-factor verification, and high-availability infrastructure. Modern systems use SWIFT-P for faster tracking, liquidity management algorithms to optimize reserve usage, and even blockchain-based experiments in cross-border settlement. But at its core, it's all about trust in ledgers. And what about your personal transfer that takes 2 days? That delay usually isn't about money traveling. It's compliance checks, anti-money laundering screening, fraud detection models, sanctions filtering, liquidity batching, and time zone cutoffs. The banking system is designed for safety first, speed second. So the next time you hear that billions moved between countries in seconds, remember, no armored trucks, no planes full of cash, no digital coins flying through cables, just reserve accounts at central banks, secure financial messages, and synchronized ledger updates across the world's most critical infrastructure. If you have enjoyed learning how invisible systems power the global economy, make sure you subscribe to Knowledge Hub for more breakdowns of the engineering behind the world around you. And as always, stay curious.